What do you think will happen with Tesla's stock price after the Q2 earnings have been released? With a lot of roadblocks that Tesla had to pass through, investors grew quite concerned about the company's earnings. Keep watching to learn more about this. Tesla stock is currently in the $800 range, a significant development as the company's stocks had been in the $600 to $700 range in recent months. The fact that the EV company's stock experienced a price dip for a significant amount of time caused investors to be concerned. In today's video, you will see Tesla stock price after the Q2 earnings. Tesla, considered as the leader in the electric vehicle market, has varying valuations, and most experts predict for the company's stock price to dramatically increase in the next quarters. Some even argue that the EV maker's stock is undervalued, while others say that it is overvalued. That remains as a topic for debate to this day. A few days ago, Tesla released its Q2 financial results as well as the shareholders' deck after market close. Before this, Wall Street forecasted that Tesla will report a 44% year-on-year rise in revenue to $17.2 billion in the second quarter. Adjusted EBITDA is expected to more than double to $5 billion, while adjusted EPS at the bottom line is estimated to rise 28% from last year to $1.85. It can be noted that Tesla delivered 254,695 vehicles in the second quarter of 2022. That was way below the 282,291 forecast by Wall Street, which had already significantly scaled back its expectations to reflect a tough quarter for the company as it grappled with supply chain problems and COVID-19 disruption in China. That was down from the record 310,048 vehicles shipped in the first quarter, but still some 27% higher than the year before. Investors are bracing for a tough second quarter, but the focus will be on the outlook and whether the ramp-up in production is starting to gain traction. Markets currently believe that will set Tesla up for a significantly stronger second half, with analysts currently forecasting Tesla can deliver a record 378,534 vehicles in the third quarter before setting another all-time high of 444,534 deliveries in the fourth. If achieved, that keeps Tesla on course to grow annual deliveries in 2022 to over 1.4 million, marking 52% growth from 2021 to come in just ahead of its 50% growth target. Tesla has faced numerous problems this year, but investors are hoping these headwinds can turn into tailwinds and provide new catalysts for growth. In the financial result released by Tesla a few days ago, the automaker reported revenues of $16.934 billion, which is about $400 million more than Wall Street expected, and earnings per share of $2.27, non-GAAP versus $1.81 expected by Wall Street. The company increased its cash position by $0.8 billion to $18.3 billion during the quarter. Automotive gross margin came in at 27.9%, down from 32.9% last quarter and 28.4% last year, brought about by inflation and more competition for battery cells and other components that go into electric vehicles. Automotive revenues made up $14.6 billion of the company's total, with $1.47 billion coming from services and other revenue, and $866 million from the company's energy segment. The company also generated $344 million in automotive regulatory credits revenue in the second quarter, which is a $10 million or nearly 3% decline from the same period in 2021. Tesla CEO Elon Musk, through the Q2 earnings call, shared some good news for the company. He said that Tesla's new factory outside of Berlin surpassed 1,000 cars per week in June, and that he expects the company's new factory in Austin, Texas, to exceed the 1,000 per week production milestone in the next few months. Tesla has grown its charging infrastructure more than its store and service centers, reporting 709 store and service locations for the quarter and 3,971 supercharger locations, with 36,165 total supercharger connections in the second quarter. Those numbers represent 19% growth in store and service center locations year over year and a 34% growth in the number of charging locations. With 2 new factories now standing in Texas and outside of Berlin in Germany, Tesla has kept in soft guidance for 50% average annual growth in vehicle deliveries over a multi-year horizon. Tesla still considers the much-awaited Cybertruck, electric semi-truck, updated Roadster concept, and other speculative projects like the humanoid robot as in development. Musk said Tesla is hoping to start delivering the Cybertruck, an experimental-looking pickup, in the middle of next year. What are your thoughts on the never-ending debate? Is Tesla stock overvalued or undervalued? Share your thoughts in the comment section below. What should Tesla stock investors expect after the Q2 earnings have been revealed? It can be noted that earlier this month, Tesla CEO Elon Musk said in a tweet that Tesla could lower prices for its electric cars if inflation calms down. During the Q2 earnings call, Musk was asked what he meant by this. Musk said, "When or if we see indications that the inflation rate is declining, then we would not need to increase our car prices. It's possible that there could be a slight decrease in car prices, but this is fundamentally dependent on macroeconomic inflation. It's not something we control. If I were to guess, and I would take this with a grain of salt, I think inflation will decline toward the end of this year. We're certainly seeing prices of commodities trending lower. Yes, but take it with a grain of salt. This is making economic prognostication is fraught with error." Regarding the supply of semiconductors, battery cells, and other components, Drew Baglino, Tesla's Senior Vice President, Powertrain and Energy Engineering, has this to say. Tesla procures about 1,600 unique pieces of silicon from 43 semiconductor companies. So with a portfolio of that size, there are always challenges. Things are more stable on the latest generation chips, and on the cell front, we have a comfortable margin thanks to record output from our partners and have line of sight that matches the planned output from both factories. We've grown cell production significantly on a 12-month rolling basis and have long-term contracts with all our partners for key battery metals. So we don't see any major problems for the components, of course, barring unforeseen COVID-related shutdowns. When asked about cost inflation impacting the profitability of these other plants, Zachary Kirkhorn, Chief Financial Officer, said, "Q2 was our largest increase yet over the last handful of quarters on inflation and commodity-related increases to our cars. It's fairly evenly spread across the factories, given common suppliers or common issues that impact the broader supply chain. So, I think I had mentioned before that we have been seeing increases over the course of last year. It ticked up in Q1, and then it ticked up again at the rate of increase was more in Q2. So as we look through to the end of the year, what we are seeing is we don't think the inflation-related increases in Q3 will be as big as Q2. As for FSD beta is on track to be released for all North American customers before the end of this year, according to Musk. Now, the question is Tesla stock a buy after the better-than-expected Q2 earnings? Tesla shares have begun to show new signs of strength. The leading electric car maker has gained more than 11% during the past couple of trading days on the back of a better-than-expected Q2 earnings report. The numbers presented to investors on July 20th indicate that Elon Musk's company has been weathering global supply chain disruptions, higher material costs, and COVID-related disruptions in China much better than its competitors. Tesla's production expectations, along with solid global demand for its vehicles, offer a good reason to remain positive on Tesla stock. A Tesla bull reiterated Tesla as a buy, saying it sees robust revenue growth for the rest of 2022. Baird analyst Ben Kallo said, "We expect Tesla to report strong revenue and higher automotive gross margins over the remainder of the year, setting the stage for further earnings growth." Bank of America's analyst John Murphy sees Tesla stock remaining in a holding pattern near term with a $950 share price target. His note says, "Despite the relatively good 2Q22 performance, we have trepidation that Tesla stock may already be priced for perfection, or at least priced for hyperbolic growth, such that near-term earnings beats may be insufficient to get bulls incrementally positive." Overall, Tesla's latest earnings report provides a solid reason to remain optimistic about the company's outlook. When Tesla released its Q2 earnings report, Tesla stock was around $740. The day after that, the stock was in the $800 range. The stock is currently sitting at $816.73. Make sure to visit our channel and watch our other videos for more Tesla stock content.